Hello there. I'd love to welcome you to this video. Thank you so much for joining me for this awesome lesson. And we're going to talk about five problems with using margin in stock trading. Now, before I go on, allow me to thank my mentors, Robert Kiyosaki, who wrote the book Rich Dad, Poor Dad. Also, allow me to thank Timothy Sykes, who wrote the foreword to the book, The Penny Stock Course. And finally, allow me to thank another mentor of mine, Matthew Creator, who wrote the book Rocket Stocks. And you can find all their books on Amazon Kindle to learn more. Now, for this video, I am going to demonstrate to you one stock that I feel is a good buy. And before that, I'm going to give you a small presentation on the five problems with using margin in stock trading. And thank you again for watching this video. My name is Lovosi Stocks. You can see me here. Uh, I, I always change. Sometimes it's Lovosi Forex, sometimes it's Lovosi Stocks, sometimes it's Lovosi Crypto. Depending on what I am teaching. If I'm teaching stocks, I change my name to Lovosi Stocks. If I'm teaching Forex, I change my name to Lovosi Forex. And if I'm teaching crypto, I change my name to Lubosi Crypto. So let's get into it. The five problems with using margin in stock trading. Now, while high margin trading can amplify potential profits, it also comes with increased risks and challenges. Here are five challenges associated with using high margin in stock trading. So the number one thing that you will find when you are, you know, trading stocks or stock options is when you're using high margin, you're risking losses. Okay, this is very important for you to remember. So high margin can lead to larger losses if the market moves against your position. Borrowed funds can amplify losses, potentially leaving you owing more money than you initially invested. So please, I think in my previous video we spoke of risk management in forex trading, but I want you to know that these concepts they apply across all asset classes, whether you are trading forex or whether you are trading stocks or whether you're trading crypto. Please remember that the problem with high margin is you're going to amplify your losses, even though there is an amplification on your gains. So you really need to understand risk management before you really step into this field. And number two, margin calls. Now, when trading on margin, a margin call may be issued if the value of your account falls below a certain level. This could require you to deposit additional funds or sell securities to cover losses. Now, this is very true for CFDs. So there are certain financial instruments called CFDs, and depending with the type of broker that you're using. So some brokers do have marginal calls while others don't. So basically, margin call is just basically how much is the broker willing to lend you. Okay, so some brokers are only willing to lend you 50% of your capital value, while others are willing to, lend you on your equity. You know what I mean? So you need to be very careful when you're using margin. So basically, a margin call is just say it's another way of saying the broker will take uh, the amount of money that you owe them from your account balance. So not only do you have a losing trade, but your losing trade is deducted. The cost of your trade is deducted from your account balance. So that's number two problem of using high margin when you're trading stocks. The third one is interest costs. Now, trading on margin involves borrowing money, resulting in interest costs. So, high interest rates or holding positions for an extended period can eat into your profits. So it's essential to carefully consider these costs. So basically, they're talking of commissions, all right? So again, this is highly dependent on the kind of broker that you are using. Excuse me, I'm just having some tea there. So again, depending on the type of broker that you're using, that's why you really, when you're trading, you really need to shop around for the right type of broker. Okay, you kind of have to like, shop around and see what's out there, what the brokers offering you, so that you just kind of get like a feel for the market. Then number four, volatility amplification. So high margin trading can amplify the impact of market volatility on your portfolio. This potentially leads to higher profits in favorable conditions, but also increases the likelihood of significant losses during market turbulence. So you can use high margin as long as you have calculated your risk. But then again, like I said before, this is highly dependent on the type of broker that you're using in your industry. All right. So you really need to do your own research, test and tinker out there for the right broker. So volatility, basically, the perfect example I can give you for volatility is the crypto market. The crypto market is super volatile, and you have to be very careful if you are trading with margin in the crypto market. That's why ideally the most recommended coins or cryptos that many people recommend is Bitcoin and Ethereum. Oh, excuse me. And so please just remember that be careful when you are trading cryptos. All right, you really need to know exactly what you're doing and why you are doing it, because volatility can definitely amplify your losses. The market is moving, right? So, again, what you need to understand about stock trading is there'll always be risk, so you really just have to calculate for that. And then the last thing is there's limited room for error. Now, trading with high margin, again, I want you to take note. I'm not just saying margin, I'm talking about high margin. You need to be careful because there's little room for error. Even small price movements against your position can result in substantial losses, adding stress and making it challenging to make well informed decisions under pressure. And of course, we're going to do a demonstration of a stock that I am currently watching right now. And we're just going to do a breakdown of how it looks. So, the key takeaway I want you to get from this is carefully assess your risk tolerance, because when you understand the market and employ risk management strategies when using high margin in stock trading, all right, so carefully assess your risk tolerance at the end of the day, okay? Because you're using high margin. If you decide to use high margin, just carefully assess your tolerance levels. Now, while margin can be beneficial for experienced traders, again, let me repeat that again. While margin can be beneficial for experienced traders, it can lead to significant financial losses for those who don't fully understand the risks. And this is something that I keep constantly saying in every single one of my videos because I really understand this market. I keep saying disclaimers, and I'll try my best to remind you of disclaimers. The risks are insane. The risks are insane, and if you do not understand what you're doing, you are going to lose a lot of money. There are stories of people who've committed suicide. So this trading is equivalent. It's equivalent to extreme sports, right? It's equivalent to, you know, it's a very very risky thing. So please be careful as you undertake this journey. And so let's look at a demonstration of one of the stocks that I am watching that I believe you could buy. Now, I'm using volume here, and we're using an indicator called the parabolic. So, if you can see, it has kind of dropped here, right? It came, there was a small crash here, and then now we have a new uptrend rising, and then we have this double top pattern that has formed here, right? You can see this double top pattern where it has crashed right here, and then it has gone up. It's had like, let's see, 1 2 3 2 4 6 8. So it started trending, I think, last week. So it's been trending for the last 4 days, and it has broken this downtrend here. So as you can see, this downtrend here has been penetrated. So using the parabolic, we can tell SAR, we can tell that a new trend has begun. All right. So when the parabolic SAR is below the price, it shows that a new trend has begun, and when it is above, it shows that the current trend has been broken. So looking at this stock right now, you can tell that this is actually going up. But of course, this market crash had a high volume here, and we can see that it's just below average volume. This also means when you look at this average volume, it also shows and means that we're in a quiet market. It means people do not know about this trend right now. There is no one talking about it as of yet. But we can also look at the breaking news uh, to get an idea of what's happening. So, as you can see, they are still talking about the Coca Cola dip. All right. Coca Cola laps the stock market. Here's why: Coca Cola currently up 8 consecutive days on pace of longest winning streak since January 2018. Data talk. Okay. So, I don't know if we could look at the news. All right, there we go. So let's look at the news here. Coca-Cola currently up 8 consecutive days on pace for longest winning streak since January 2018. Data talk. All right. So Coca-Cola company KO is currently $59, 59.99, up at 0.17 cents or 0.28%. All right. So we can see the points here listed courtesy of Dow Jones News Wire. And let's pass through maybe we can pass through at least 2 points, 2 to 3 points, and see what it says. So here it says down 9.39% from its all-time closing high of 66.21 on April 21st, 2022. So 2 years ago, or a year ago on April 2022, the Nike, not Nike, sorry, the Coca-Cola stock price had fallen down. So basically, we're looking at the price action history, down 4.66% from 52 weeks ago, January 4th, 2023, when it closed at 62.92. So basically, what you are seeing is there was a downtrend from 2022 all the way up to 2023. Then finally, before this up, which happened on October, we see that it crashed down by 6.7% from its 52-week closing high of 64.330 on 1st May 2023. So basically, what they're saying is the Nike stock had hit its bottom in May, around May. Not Nike, sorry. Coca Cola had hit its bottom around May. This was the last recorded bottom. It was the last recorded, and then all of a sudden it just shot up beginning October, up by 14.53% from 62 weeks closing low at $52.38 on October 5th. So what this is telling us is the uptrend actually began in October. So this move that we're in right now is actually a 3-month move because it began in October 1, 2, 3, and this is the beginning of January. So this is actually a 3-month trend. Okay, so you can kind of see the trend going up, right? Kind of like a V shape, and it's broken a new trend right here. It did so last week on Thursday, December 2023. So I hope you enjoyed this, demonstration, and yeah, and I hope you enjoyed the presentation of how to see why trading high margin can be a problem in stock trading. Also, we can see from this pattern, this does look like a double bottom, not a double bottom, sorry, a double top. So this could also mean there is a breakout coming up here. And of course, if you would love to learn how to analyze technical analysis, I have the beginner level called the Rocket Booster Strategy. You should check it out in on, in the previous video where I talk about the Rocket Booster Strategy. I would love to thank you so much for watching this video. Please, my disclaimer is do not buy what I tell you to buy. Do not sell what I tell you to sell. Do your own research before you buy or sell anything. Trading is risky and you can lose money. I would love to thank you so much for watching. Take care and bye bye.